The Ministry of International Trade and Industry has reversed its earlier decision to order manufacturers operating in localities placed under enhanced MCO to conduct COVID-19 tests on their employees twice a week. Updated guidelines by the ministry show that the requirement for biweekly tests have been removed. However, it remains compulsory to conduct tests on workers that show symptoms. It is understood that the National Security Council decided this in a special meeting. It was reported last Monday that MITI had made it compulsory for workers employed by manufacturers in areas of Selangor under the EMCO to be tested twice a week using the antigen rapid test kit to detect infected workers. The EMCO in Selangor was lifted on July 16th. Senior Minister of International Trade and Industry Datuk Sri Azmin Ali said that the move was to help identify COVID-19 infections earlier and allow only workers that have tested negative back into the workplace. At that time, Azmin said that employers need to cooperate and be responsible for the entire COVID-19 screening cost. British American Tobacco Malaysia's net profit for the second quarter rose 31% to 71.6 million, driven primarily by domestic volume growth. Quarterly revenue increased 9% to 595.8 million. BAT also declared an interim dividend of 24 cents per share. The group attributed the better performance partly to the implementation of Budget 2021 measures such as tobacco transshipment restrictions to control the tobacco black market. For the first half of FY21, net profit improved 28% to 134.7 million, while revenue grew 13% to 1.16 billion. MD Jonathan Reid said in a statement that the profit growth in the first half was primarily due to BAT's 14% growth in domestic volume, which outperformed the total legal industry recovery rate of 12%. He says that while there are early signs that measures implemented during Budget 2021 are working, the level of illegal cigarettes still remains high, and that over 58% of the tobacco market is dominated by criminal syndicates. Reid says that it is also critical for the government to introduce a regulatory framework for nicotine vaping products where it would protect the 1.1 million Malaysians that do it and establish a new revenue source for the government. New daily COVID-19 cases surged to a new high of 15,573 today, in line with an increase in the testing rate, the Health Ministry says. The previous record high number of new infections was 13,215, posted on July 15th. A total of 137,326 COVID-19 tests were conducted today, compared with 128,279 yesterday. Health DG Tan Sri Dr. Nur Hisham Abdullah says that 98.7% of today's infections were classified as Category 1 and 2, which are no symptoms to mild symptoms. Selangor continues to lead in new infections, reporting 7,672 new cases today, followed by Kuala Lumpur with 2,063. Another 144 deaths were reported today, while daily recoveries came in at 10,094. Malaysia's daily number of administered COVID-19 vaccine doses topped 500,000 for the first time on July 22nd, which brings the total number of doses given out to 16.02 million. According to the government, some 72% of the adult population in the Klang Valley have received their first dose as of yesterday. Malaysia's Consumer Price Index rose by 3.4% in June, expanding from a year earlier. 13 economists polled by Reuters have forecast the index to increase 3.5%, which was the same as Bloomberg's consensus. The index in April rose at its fastest pace in 4 years. Transport costs, which increased 16.6%, was the main driver for the increase in June CPI, according to the Statistics Department. Housing and utilities, household furnishings and maintenance maintenance, and food and non-alcoholic beverages also saw higher prices during the month. According to an economics note from UOB, it is expecting inflation to hover around 3% in the second half of 2021, bringing full-year CPI growth to an average of 2.5% for 2021, which is lower than its previous forecast of 3%. UOB also says that it does not see an immediate need for Bank Negara to ease monetary policy further, even as downside risks increase due to persistently high COVID-19 numbers and ongoing containment measures. Royal Dutch Shell launched the sale of its stakes in oil and gas fields it does not operate off the coast of Malaysia, Reuters reports. To recap, back in March, Shell announced that it was considering selling its stakes in the Baram Delta EOR and the SK307 production sharing contracts, which are operated by Petronas Carigali, a unit of national oil firm Petronas. Reuters reports that the sale process for the two stakes, launched this month, is being run by investment bank JP Morgan. The sale forms part of Shell's strategy to focus its oil and gas production in 9 hubs as it gradually reduces output and grows investments in low-carbon energy in order to reduce greenhouse gas emissions. Sarawak Shell owns a 40% equity interest in Baram Delta and 50% in SK307, with Petronas Carigali holding the remainder.